Hi, I am Anna. I come from www.ntvforex.com. FX update: weaker dollar and stronger sterling analysis. http ntvforex.com news ID 7C248981 13/20/29 49:47 am. The dollar is down for a second day, with the narrow trade-weighted USD index printing a 6-day low at 93.08 to nearly fully unwind the gains seen in the wake of last Friday's US July jobs report, when we printed an 8-day high at 93.87. Some market narratives have been attributing the dollar's ebb as being a return of the currency's inverse correlation with stock market direction, along with the perception that the Fed has strategically dropped its concern about inflation risk, which has driven real U.S. yields into negative territory. These factors appear to be outweighing the improvement in the U.S. economy and downward trend in new coronavirus cases. As for Washington's tensions with Beijing, this has not been much of a concern for Wall Street, with most onlookers anticipating this weekend's meetings to review progress on the Phase 1 trade deal will go well, even though China has been lagging behind in its purchases of U.S. farm and energy goods. Among the main dollar pairings, Eurist climbed to a 6-day high at 1.1838, putting the 27-month high seen last Thursday at January 1917 back in the scopes. USD/JP extended a moderate correction from yesterday's 3-week high at 107.03, posting a low at 106.57. The yen was more mixed against other currencies, with EUR/JP remaining buoyant, just off the 16-month high that was pegged yesterday at 126.23, while AUD/JPY traded softer after the cross peaked at a 3-week high yesterday. The Nikkei 225 hit a 6-month high, which followed a strong close on Wall Street yesterday, with the S&P 500 finishing just a whisker below a record closing peak. European stocks have opened lower, with GER30 holding over 13,000 at 13,025 and the UK 100 trades down around 6,200. AUD/USD edged out a 2-day peak at 0.7188. Australian July employment data showed a forecast smashing 114,700 rise in the headline, while the June figure was revised higher, though lockdowns across the country are now blighting the immediate outlook. USD/CAD settled just above Wednesday's 6-month low at 1.3227. Sterling is trading mixed, edging out a 2-day high at 1.3092 against the dollar, while also gaining on the yen and Aussie dollar, but holding steady to softer versus the euro and some other currencies. Yesterday's preliminary UK Q2 GDP data showed a gargantuan 20.4% QQ contraction to confirm the technical definition of recession following Q1's 2.2% shrink. The data was not a surprise given the lockdown that was in place to varying degrees throughout the quarter. June GDP rose by 8.7%, however, with June production data showing a robust rebound and beating expectations in the main headline readings, while high-frequency data and a myriad of anecdotal evidence point to a strong rebound in the current quarter. The government's furlough scheme has greatly limited the impact on the employment market. We have been talking down the pound, to a degree, having seen limited scope for the currency to sustain its recent patch of outperformance. The bull last week delivered a warily upbeat outlook, though with localized lockdowns and most media doing their utmost to maintain maximum fear of a second wave of coronavirus infections, we take a circumspect view of the outlook over the coming months, anticipating a plateauing in economic rebound momentum. Manchester, Preston, Bradford, and Aberdeen are back in lockdown, and there is a number of new travel restrictions with other countries. The furlough scheme will end in late October, which is likely to trigger a wave of job losses, particularly in the airline, retail, and hospitality sectors. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.